Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 19th of January 2025. And yesterday we published our regular weekly financial update. This is a repeat of that video. Why? Because we've noticed that fewer people are obtaining access to our videos in recent weeks. And we can only put this down to the YouTube algorithm. Nevertheless, gold and silver are still on the rise. The question now is, after Trump's inauguration, will that rise continue? Looking at the figures, gold rose $14 last week, rising from $2,690 to $2,704, having hit a high of $2,729 and a low of 2,657, a rise of 0.6%. Gold spread between high and low was $72. Last week we predicted gold would trade between 2,600 and 2,725, and although we had a slightly higher outlier range, gold traded within our predictive band, say for $4 for about 5 minutes. In sterling terms, gold went up £18, closing at £2,229, and in euros it closed up €10 at 2,640 euros. Silver rose 6 cents, rising from $30.43 to $30.49, having been as high as $31.26 and as low as $29.55, a rise of just 0.2% compared with gold's 0.6%. The difference between its high and low was $1.71, higher than recent weeks, but to be quite honest, it's slightly lower than we were anticipating in terms of spread, in view of the amount of economic data being released last week. We predicted silver would trade, though, between $29 and $32, which it did quite comfortably. In sterling terms, though, silver actually went down 2 pence at £24.97 an ounce, and in euros it closed at 29.78 euros. That's unchanged. Gold-silver ratio then rose just very marginally from 88.4 to 1 to 88.7 to 1. Looks like silver's going to struggle to get out of this 80 to 1 range with gold, and we suspect moving forward that struggle will continue. In fact, we may even find short-term that ratio could move into the 90s. Bitcoin currently stands at $103,000. That's up $9,000 on the week, and pundits are forecasting further rises very soon. Equities were higher across the board, with a 1% spurt broadly on Friday. Dow Jones is up 1,549 points at 43,487. The S&P 500 up 169 at 5,996, and the Nasdaq Composite up 469 at 19,630. Even the good old FTSE 100 index is up, quite a considerable for it, 257 points at 8,505. Unfortunately, for those of us who drive vehicles, oils are higher again. Brent crude closed at $80.79, that's up $1.03 a barrel, and WTI crude closed at $77.88, that's up $1.31. Dollar index, very marginally down 0.21 points at 109.34. Now, last week we stated, quote, well, this coming week may prove exciting because we have some key data being reported, unquote. Well, the Tuesday PPI report for December showed a fall from 0.4% to 0.2%. Remember, this report provides a reasonable gauge for future inflation prices. Followed then by the CPI figures on Wednesday, which showed year over year rising from 2.7 to 2.9%, which was expected. But the core rate, which was expected to remain steady at 3.3, actually fell to 3.2. On Thursday, retail sales for December were expected to come in at 0.5%, but showed just a 0.4% rise. And bear in mind, this is still down from November's rise of 0.8%. And on Friday, housing starts and building permits were marginally up. Now, this coming week, we have nothing reported until Wednesday, whereby we then, on that day, have the US leading economic indicators. We have initial jobless claims on Thursday, and consumer sentiment figures on Friday. So not much economic data to affect markets. This means that the focus on the inauguration and Trump's first executive orders are likely to have the major impact on all markets across all asset classes, as well as the value of the US dollar. Last week we pointed out that analysts predicted that the CPI figures could push gold above the 2,726 level to as high as 2,790, and although they were partially right, it peaked at 2,729. Now analysts are hoping that easing inflation data has strengthened expectations of a dovish Federal Reserve stance, which typically supports gold. The Consumer Price Index, as mentioned, posted a modest 0.2% monthly increase, while the core inflation rate came in below forecasts. Federal Reserve Governor Christopher Waller added to this sentiment by highlighting the possibility of multiple rate cuts if inflation continues to cool. Futures markets are pricing in nearly even odds of 2 rate cuts before the end of the year, and that is broadly where we feel that is likely to be where the US will end up. These expectations weaken the dollar and reduce the opportunity cost of holding gold, boosting its attractiveness to global investors. On the other side, however, Trump's proposed fiscal and trade policies, including tariffs on imports, are expected to create inflationary pressures. Tariffs could drive up consumer prices, complicating the Federal Reserve's decisions on interest rates. Some see this uncertainty as being positive for gold, while others see it as potentially curtailing as the dollar value remains high. Now, analysts are therefore predicting a potential surge in gold prices to $2,790 this week, or a fall to as low as $2,663. Now, although no one in the markets are mentioning this, we also warn that there is still around $150 war premium in the global gold price to cover for geopolitical uncertainties. With perhaps a brokered peace between Israel and Palestine and the potential for a settlement in Ukraine, there is a strong possibility that gold could be discounted by $100. The question then is, will the potential for lower rates make up this difference? As far as silver is concerned, analysts can see downside, but certainly no lower at this stage than $28.75. Its demand did appear rather tired on Friday, looking behind the scenes. Now, James Hyschik of FX Empire reported the following, quote, "Strong US retail spending and rising business confidence, as highlighted by the Philadelphia Fed survey, indicate economic resilience. This strength may lessen the urgency for aggressive rate cuts, limiting silver's appeal. The dollar's strength, supported by incoming Treasury Secretary Scott Bessent's commitment to maintaining its global dominance, could also weigh on silver. A stronger dollar makes silver more expensive for international buyers, curbing demand. Additionally, China's demographic issues, including a third year of population decline, could dampen long-term industrial silver demand. If markets have misjudged the Fed's willingness to cut rates, silver could face renewed selling pressure." Unquote. We would not necessarily disagree, though at this moment in time, until the Trump presidency settles down, almost anything can happen. So where do we forecast gold and silver this coming week? Well, we're going to expect gold to trade somewhere between $2,650 and $2,750, with 2,625 and 2,775 as outliers. Silver slightly less bullish. We expect silver broadly to trade between 29 and 32, with 28.50, and if it does go against us, 28.25 to 32.50 as outliers. What do you think? Please, we'd appreciate it if you would share your thoughts. Meanwhile, thank you so much for listening. Please give this video a thumbs up, subscribe, press the bell sign. Pop on over to our sister channel, Finances Do Matter, and subscribe there. Have a great weekend, and for certain, those in the United States and abroad, a wonderful Inauguration Day, and we shall see very shortly after Trump's announcements as to how the rest of the week will transpire.